It's a lovely good morning to all of you. Thank you for coming through, and those of you that are joining us online. My name is Lois Ambata, and I'll be the Director of Programs for today's ZCCMIH Investor and Capital Markets Day event. I'd like to acknowledge the Zambia's Ambassador to France, Your Excellency Ms. Judith Mlenga, the ZCCMIH Board Chairperson, Mr. Festo Musonda, the ZCCMIH Board Director representing the minority shareholder, Mr. Philippe Tussac, and other board members that are joining us online, the ZCCMIH CEO, Chief Executive Officer, Mr. Kakenenwa Muyangwa, and other executive management and staff present, distinguished guests, investors, partners, and friends of ZCCMIH, whether in person or joining us via the webcast. All protocol observed, and it's a lovely good morning. It is indeed a privilege to welcome you to the Capital Markets and Investor Day here in Paris, and thank you for being with us, especially those of you who have traveled from afar. We have gathered here for a simple reason. ZCCMIH stands at the center of Zambia's mineral and energy story, which with interests that reach across the country's leading copper producers and a growing energy and mineral portfolio besides it. Now, today is our opportunity to take you inside that story, not in headlines, but in detail. And over the next course of 2 hours, we will walk you through who we are and where we are going, our strategic direction, the performance and prospects of our key assets, the disciplined reforms behind our financial position, and the way we intend to create lasting value for shareholders and for the Zambian people alike. You will hear directly from the speakers that are seated in front, and also Her Excellency joining us here. And also, you will have room to test what you hear and ask the hard questions. We have built the program to leave generous time for discussion, but of course the conversation in this room matters as much as the presentations that will be given here on the stage. We will begin with remarks from the board chairperson, Mr. Festo Musonda, and Zambia's ambassador to France, Her Excellency Ms. Judith Mlenga. And this will be followed by presentations by the Chief Executive Officer, Mr. Kakenenwa Muyangwa, and the Company Secretary, Dr. Charles Mjumpi, who will talk about the listing optimization program. I'm sure it's something of interest to all of you shareholders here. After the presentations, indeed, as I mentioned earlier, we will have some question and answer session. We did receive some of the questions earlier during the submission registration, and obviously some of those we'll respond to them, and we'll talk about the strategic on how we're going to approach that. We will then close the 2-hour session with the remarks by the chairperson. And just maybe a few points of housekeeping. Make sure just your phone is on silent. And if you want the translation, French translation, we have the headsets outside there. Please feel free to grab one. We have the English and the French translation, including those of us who are following us via the webcast. There is channel for English, and there's also a channel for French. So on behalf of ZCCMIH, I'd like to give you a warm welcome. It's now my pleasure just to invite the board chairperson to come and give us the opening remarks, after which in turn, he will invite Her Excellency Ms. Judith Mlenga.
A very good morning to all you here. I want you to answer back. Good morning. Good morning. With the advent of AI, you never know who. There's a lot of modeling around the world, so thanks a lot for that feedback. The Zambian ambassador to France, Her Excellency Mrs. Judith Mlenga, the ZCCMIH Board of Directors present here, and also representing the minority, Mr. Philippe Tussac, and board members who I know are joining us virtually. The ZCCMIH CEO and management present here, and also those I recognize them who are joining us virtually. The minority shareholders present here, and a special recognition to Mr. Thierry Charles. Distinguished investors, partners, members of the media, and colleagues. Allow me to ride on the protocols established already, and I wish to simply say good morning, ladies and gentlemen. On behalf of the board of ZCCM Investment Holdings, it is my privilege to welcome you to our Capital Markets and Investor Day here in Paris. Let me also welcome everyone joining us from around the world, watching live through our Euronext webinar. We are delighted to have you with us today. Let me begin with a word of thanks. Many thanks to you who have traveled a long way to be here, and your presence reflects the growing interest in Zambia's story and in the role our company plays within it. Today is our opportunity to set out that story and to show you the strategy behind it. We have chosen Paris deliberately so. ZCCMIH is listed in Lusaka, in London, and here on the Euronext Access Paris, and many of our European shareholders are based in France. These three listings give investors across the world a direct stake in Zambia's transformation. Earning the confidence of investors like you is central to our work, and a good deal of what we will set out today and speak to it. Ladies and gentlemen, it has been my privilege to chair this company through a period of real change. And after more than 30 years in Zambia's mining and industrial sectors, I can tell you this is a moment unlike any I have seen. ZCCMIH is the only listed vehicle offering diversified exposure to Zambia's mineral and energy transformation on a single balance sheet. We hold strategic equity and royalty positions across the country's largest mining and power assets. At a moment when Zambia has set a national target of 3 million metric tons of annual copper production by 2031. Copper, as you know, is the metal that the world's energy future is built on. The electrification of transport, the expansion of power grids, the AI revolution, every part of it runs on copper. And Zambia holds some of the most significant resources anywhere in the world, much of it still to be developed. Following the mining and energy sector's reforms implemented by the government under President Hakainde Hichilema, the sectors have attracted more than $12 billion in investments, unlocking critical opportunities in the energy and mining sectors, laying the foundation for stability and growth. ZCCMIH sits at the center of that effort, with exposure across most of the country's leading copper producers. When Zambia reaches its 3 million metric tons ambition, our equity share across the portfolio would represent close to 1/10 of the national output. That makes this company, in a very real sense, the way to invest in Zambia's copper growth story. But we are not only a copper story. Our energy portfolio is generating cash today and expanding to support the power that the country's industrial growth will require, including the copper mining industry. For your information, the targeted 3 million tons projected by 2031 will require power of about 8 gigawatts or 8,000 megawatts. Our interests extend into the broader mineral base, into value addition and formalization of Zambia's gold and manganese subsectors. Our greenfield licenses are in some of the most promising areas in Zambia. Few companies anywhere can offer this combination on a single balance sheet. So what you will hear today is how we intend to convert our position into lasting value for our shareholders and for the Zambian people on whose behalf we hold this portfolio. So, you will hear from our Chief Executive Officer, Mr. Miyangwa Kakenenwa, sitting with me here, on the strategic roadmap and where we are taking this business. You will also hear from our Company Secretary, Dr. Charles Mujumpi, on our listing optimization program. There will also be time for your questions, and we welcome them. We are here to engage and to listen, and the conversations we have today and over lunch afterwards matter as much to us as the formal program. Before we turn to that program, it is my great honor to introduce our special guest. I'm sure as we stood by in the other room, I did introduce to a few of you. Zambia's presence here in Paris and the strength of the relationship between our two countries is something we value deeply. It is a real privilege to welcome Her Excellency Ms. Judith Mlenga, Ambassador of Zambia to France, who will offer some remarks and opening greetings to you all. As you know, the CCM is supported, work closely with the Zambian government, and the Zambian government is represented very well in France. And what a privilege in Paris itself, close to us. So I wish to invite Her Excellency, I think, to, as a host, she's a good host for us. And thank you for having welcomed us. We are here and would like you to give your remarks. Thank you very much.
Thank you very much for those kind words. I've never been called special before. It's the first, so I'm very proud of that and happy. Chief Executive, Mr. Miyangwa, distinguished investors and guests, Mesdames, Messieurs, bonjour. It is an honor to be with you here in Paris and to welcome you here on behalf of the government and people of Zambia. And there's no more fitting place for it than in France, a country Zambia is proud to call a friend. France and Zambia have built ties over many decades in diplomacy, in development, cooperation, in education and culture, and increasingly now in trade and investment. The listing of ZCCM-IH here on the Euronext in Paris is a further chapter in that story. It places one of Zambia's key firms within reach of European investors, and it invites you to take part directly in our country's future. I want to extend that invitation to you clearly this morning. Zambia today is a democratic and open country. We are proud of our democratic traditions, of the peaceful transfers of power that have marked our national life, and of the institutions that underpin them. We are a nation that honors its commitments and welcomes international partners. And we have worked hard through difficult and necessary reforms to restore our economic footing. That work has not always been easy, But it has been undertaken with a discipline and with purpose, and it has built an environment in which investment can grow with confidence and in which partners can plan for the long term. As economies everywhere seek partners they can rely on for the critical minerals of the future, Zambia offers something increasingly rare: significant resources, a stable investment climate, and a long history of working openly with partners from every part of the world. We seek investment that is responsible and that benefits both sides, and development that reaches the lives of ordinary Zambians. The vision of our government holds is one in which the wealth beneath our soil builds the schools, hospitals, power, and opportunity above it. Allow me to say a final word about partnership itself. The strongest relationships are built on trust and on time. That is true between countries, and it is true between investors and the companies they back. We are looking for partners who will grow with us over decades, as ZCCM-IH itself intends to. So on behalf of the government and people of Zambia, let me say simply, you are most welcome here today. Your partnership is valued, and Zambia is open for business. I wish you a most productive day, and I look forward to the conversations ahead. Je vous remercie. Thank you very much. So I butchered the French greeting. Yes.
Thank you so much, Your Excellency, for those remarks. And indeed, Zambia is open for business, and we value the partnerships that we have from all of you, the investors, the stakeholders that are present here in person and also joining us on the webcast. And also the remarks from the board chairperson anchoring what is going to be laid out in the next couple of minutes. And it's my pleasure to invite to the podium the Chief Executive Officer, Mr. Kakeneno Muyangwa, who will give us the company's strategic roadmap and direction and the performance thereof. See you. Thank you.
Good morning, everybody. Bonjour à tous. And welcome to ZCCM-IH's Capital Markets Day here in Paris. Thank you all for being with us. Over the next couple of hours, we will show you exactly what we own, how it's performing, where the growth comes from, and how we are creating shareholder value, including our plan to close the gap between our share price and the real value of this portfolio. There will be plenty of time for questions at the end. So let's begin. A quick word on the disclaimer. Firstly, this presentation is for information only, not an offer and not a recommendation. Secondly, some of what we will cover is forward-looking. It reflects our best current view, but is subject to change. With that said, let's turn to the agenda. Here's our agenda. We'll open with an overview of the company, and then the macro scene, why copper, why Zambia, and why now. Then the portfolio by asset class: copper, our cash engine; energy, now cash generative; and diversified minerals. After that, the returns, our financials, dividends, and the share price. We will close on the listing optimization program, which is central to our value story, and then take your questions. Let me start with who we are, our ownership, our listings, and the shape of the business. This is a holding company creating value today while operating on a very long horizon. At our core, we are a sovereign-anchored holding company. The Zambian government controls roughly 78%, 16% through IDC, and then 17% direct investment through the Ministry of Finance. NAPSA, our national pension scheme, holds about 15%, leaving a 7% free float. ZCCMYH is triple listed, with the primary listing on Lusaka and London and Paris being secondary. That international footprint is deliberate and central to the listing program you'll hear about later today. We are building for a 30 to 50-year horizon, not just quarter to quarter. This is the whole investment case in one frame. No other listed company offers this breadth of Zambian mineral and energy assets on one balance sheet. Copper is the majority of our net asset value, anchored by the Kansanshi royalty, of which $137 million have been paid since 2022, paid whether or not the mine declared a dividend. Mingomba is our next big growth asset, coming online in 2031 with our partner Cobalt. Energy is now genuinely cash generative, a near 100% load factor, and the first dividend paid in 2025. Our diversified minerals portfolio contains some very exciting prospects, including our gold and manganese formalization program. And underpinning it all is a dividend paid every year since 2015. Here is the full portfolio: 20 assets with our equity stake in each, 9 in copper, 5 in energy, anchored by Mamba and Copperbelt Energy, 6 in diversified minerals, including Kariba and Kabundi, which we own outright. The takeaway here is the diversification, a curated set of stakes in the country's most significant resources. And in several, like Lubambe and Mingomba, we are actively pursuing a larger equity stake. Now the big picture. 3 questions frame everything that follows. Why copper? Why Zambia? And why now? We are entering an unprecedented external environment that will drive rapidly growing demand for our resources. So let me set out the case. The copper story is a structural supply-demand gap. Demand is growing at about 6% a year. Electric vehicles use 4 times the copper of petrol vehicles. Wind and solar are copper intensive. Grids need rebuilding. And AI data centers are a whole new driver of demand, putting another layer. At the same time, supply is going in the opposite direction. The world faces falling ore grades, 15 to 20-year lead times for new mines, concentrated geography, and ESG limits on new projects. Rising structural demand against constrained supply. This is the making of a historic copper cycle, and power generation will need to increase rapidly in Zambia to support our ambitions. I think the chair was very clear in terms of the targets that are required. The two go hand in hand. ZCCMYH is positioned to seize this opportunity. So why Zambia and why now? Production has turned a corner, and the government is visibly backing the sector through effective policy. infrastructure investment, and a regulatory certainty. The national target is 3 million tons of copper a year. And as you can see, the country is generating year-on-year increases in production. Mining already takes 45% of Zambia's national electricity, with demand growing 6% a year. As a sovereign anchored vehicle, ZCCM-IH sits right at the center of that national strategy. Invest in us, and you invest alongside the state that is committed to scaling production across mining and energy. Now, let's go deep on copper, the cash engine. The idea is simple: predictable cash today, growing production tomorrow. You'll see how existing assets generate predictable cash, how the funded pipeline scales through 2031, and how our turnaround assets are being stabilized. Our copper book is built around predictable cash, and the best example is the Kansanshi royalty, $137 million paid since 2022, paid regardless of the dividends. In both 2023 and 2024, Kansanshi declared no dividend, yet the royalty still paid us. That's the resilience that we want, and a royalty to revenue template that we will extend across our portfolio. National output hit 890,000 tons in 2025, and at Zambia's 3 million ton target, our equity share, what we call our equity metal, would be close to a tenth of the national output. Now we turn to where our growth is coming from: a funded pipeline of highly promising assets. Mingomba is one of the best undeveloped copper assets globally. Alongside Cobalt, our partner, our stake is set to rise to 25%. And it is coming online by 2031, scaling towards 500,000 tons per annum. CNMC Luanshya, the $500 million Shaft 28 that was started a few years ago, reopens in August this year, scaling to 100,000 tons per annum by 2030. And NFCA have an expansion of $400 million at Chambishi, which is targeting 110,000 tons per annum. These are three assets that are set to add significantly more production to our portfolio by 2031, with the funding and partners in place. Alongside the growth pipeline, these are our three copper turnaround stories: legacy assets that have been stabilized, are being recapitalized and scaling, each backed by a strong partner. Mopani is now scaling. Through the strategic equity transaction with IRH, its historic debt of $1.7 billion has been resolved, and the asset is actively ramping production towards 220,000 tons by 2027. Lubambe, in turn, is stabilizing. JCHX has committed $300 million to stabilize and expand operations, and our stake increased from 20 to 30% in 2025, reflecting its growing strategic importance. Konkola is being recapitalized. KDMP remains one of Zambia's most significant copper resources, and Vedanta has made a $1.1 billion investment commitment, of which $330 million has been injected into operations for growth and sustaining capex as of January 2026, with our 20.6% interest giving meaningful exposure to a major long-term asset. The common thread here is that distressed assets are being turned into producing ones, with partners funding much of the turnaround while we retain substantial upside. Now, energy. This is a business that has quietly become cash generative and is about to get bigger. This is no longer a strategic holding sitting on the balance sheet. It is generating consistent dividends and scaling rapidly. Our baseload rests on two thermal assets, Mamba and Evergrande, both using clean CFBC technology and enhancing Zambia's energy security. Mamba is the jewel, Zambia's only thermal baseload plant, where we maintain a 35% stake, is operating near 100% load factor. It paid its first dividend in 2025, $39 million in total, now being paid on a quarterly cycle, and our $50 million phase 2 investment doubles capacity from 300 to 600 megawatts by the end of 2026. Evergrande adds a greenfield 300 megawatt plant in which we hold a 30% stake, and this is targeted to go into production by January 2027. And the CFBC technology captures over 90% of sulfur in furnace. This is reliable baseload without air quality footprint. And by the way, you need this baseload to be able to feed in green energy, solar energy, to mix and balance the power on the national grid. Alongside thermal, we hold three renewable platforms. Copperbelt Energy, where we raised our stake to 33.5% in 2025, is the grid backbone of the Copperbelt. Now it's adding solar, 30 megawatts at Riverside, 60 at Itimpi, and 136 megawatts at Itimpi 2, which was recently commissioned. At Mamba Solar, our 35% stake pairs with the thermal plant for 24/7 dispatch and lowers its blended carbon intensity. And Zambia National Energy, where we hold 60%, is rolling out 2 megawatt solar in each of Zambia's 156 constituencies, targeting 312 megawatts, and where we maintain full equity upside on future PPAs. Alongside, now going into the third leg, which is the diversified minerals. The plan here is simple: broaden the base and move up the value chain, ensuring that we have more processing and the beneficiation in Zambia, not just shipping raw materials out. Let me show you what that looks like in practice. At the center of the minerals platform is a dedicated commodities trading capability, giving the group market access and margin capture across all our commodity flows, rather than leaving that value on the table. Around it sit our diversified positions, gold and the formalization of artisanal output into the economy, phosphate and fertilizer for value addition, and battery metal exposure. The logic throughout is the same: on the floor and capture the margin. Underpinning the next decade is an extensive exploration footprint. Zambia's countrywide aerial survey is already discovering high confidence targets, and the standout is Northwestern Province, our most prospective region. With our license portfolio, the intent is clear: to define the next generation of assets so that that pipeline keeps replenishing. We're not just managing today's assets, we are sourcing tomorrow's. Now the returns, financials, dividends, and share price. As you can see, we have the company results on the left and the group results on the right. ZCCMIH is a company that has been transforming over the last 3 to 4 years. And in any corporate transformation, there will be associated costs and noise surrounding year to year, reflected in our financial statement. Fundamentally, this company is moving in the right direction and has been doing the work necessary to position us for long-term growth and create value for our shareholders. The swing into a net loss of $168 million in 2024 from a $236 million profit in 2023 was driven by the one-off $150 million investment expense from the Mopane restructuring. Note that 2022's higher income reflected a one-off $195 million Kansanshi dividend, and that income eased further in 2023 to 2024 on lower loan and term deposit interest. At the group level, the spike in total income and the net profit in 2024 is related to the $1.7 billion Mopane Glencore debt write-off. The 2022 and 2023 losses reflect Mopane's underperformance during restructuring. Now we turn to the balance sheet. Again, company on the left and the group on the right. At the company level, total assets more than doubled, up 107% from $1.4 billion in 2022 to $2.9 billion in 2025, driven by the higher fair value of our investment. Equity and reserves rose in step, up 101% from $1.4 billion to $2.4 billion on those fair value gains plus retained profits. At the group level, assets fell 17% over the same period because Mopane moved from being a subsidiary to an associate, shrinking the consolidated asset base. Despite that, equity and reserves jumped 303% from $542 million to $2.2 billion, reflecting the reclassification and the gain from the Glencore debt write-off. That debt write-off has been transformational for our balance sheet, leaving it in a much stronger position with minimal debt. To sum it up, the company balance sheet is strengthened on investment revaluation, while the group's lower assets but much stronger reserves reflect a cleaner and a more resilient structure post-Mopane transaction. This is a slide I'm particularly proud of. It shows consistent returns to our shareholders. Despite the transitional costs generated by a corporate turnaround, we have paid a dividend every year since 2015. Over the last 5 years, we have returned $75.2 million, and the 2024 payout was the highest in 5 years, $22.9 million, or 14.2 cents a share, a roughly 5% yield on the Lusaka share price. And this is policy-backed, set at a floor of 35% of realized net profit. We have demonstrated the ability to pay a reliable dividend throughout the cycle. The ultimate judgment on our performance is reflected in our share price. Over the past 41 months, our Lusaka share price has risen by 295%. Meanwhile, Paris has risen by 115%. Both jumped between June and August 2025 on the dividend and the Mamba Phase 2 commitment. We have generated significant value for shareholders through this sustained rise in the share price. We are focused on going further and closing the price gap between our active listings, and that is exactly what the next session is built to address. Which brings us to an important theme of the day, listing optimization. This is our program to improve global price discovery across our 3 listings and to close the gap between our share price and the real value of these assets. To take us through it, let me hand over to our Company Secretary, Dr. Charles Mujumpi.
Good morning, everyone. I'm happy to see Mr. Thierry Charles here. I know we haven't met physically, but virtually we've met several times. Glad to have you, and I do recognize everyone else that has attended this event. What I'm going to talk about now is something that looks like a problem, but it's also a very, very good opportunity for our company. So if you look at the slide that is in front of you, we are using the Lusaka share price as the reference price. This is the share price as of, I think, early this week, $8.7 per share. The Paris Euronext price is at $3.55 per share, whilst the London is at $1.65 per share. Now, what you notice is that there's a very big spread or a very big discount relative to the Lusaka share price. For example, the Paris Euronext stands at about 60%, whilst that of London is about 81%. So there's a huge or severe price arbitrage across the three stock exchanges. Now, what is the problem? Well, if you look at the net book value or even the net asset value of the company, it now stands at about $2.4 billion. And then the closest valuation on all these stock exchanges is the Lusaka Securities Exchange, which stands at about 1.4 billion. So still there's a spread of about 1 billion. And then can you imagine now a 59%, almost like close to half on the Paris, and then a very huge discount on the London Stock Exchange. The cause of this problem is first a structural problem. So for example, if we start with the London Stock Exchange, the main issue is that this is the oldest register that the company has ever had since its listing in 1970. Now, you know that historically, the actual listings were in certificate form. And the register on the London Stock Exchange still has a number of those shareholders whose shareholding is still held in certificate form. But this is 2026, where platforms for trade have changed, and we have now the CREST system that operates on most of these exchanges. So what it means is that for shareholders whose shares are still held in certificate form, they can't be seen and they can't see anyone. That's problem number one. For the Paris Euronext, whilst it is the most active stock amongst the three stock exchanges, what you notice is that we are listed on the Euronext Access, which is like the, below the prime listing. Therefore, even if there is heavy trading on the Euronext Access, the actual price discovery, particularly if you're going to attract investors that are slightly bigger or that are looking long-term, it remains invisible to such kind of investors. Therefore, we're not able to have price discovery. On the Lusaka Securities Exchange, it's a different problem. It's the availability of the shares. So basically, it's the low free float, but also the low volumes because the market is still developing and it is still small. But we've seen a lot of traction on the Lusaka Securities Exchange with some shares being sold, particularly from some shareholders that have sold their stock, moving from the Paris Euronext into Lusaka, but also within the Lusaka Securities Exchange. Therefore, we need to deal with this underlying problem. Now, how are we going to deal with the underlying problem? Well, we will address the market structure issues that I have highlighted. So on the London Stock Exchange, we need to revert to the modern way of facilitating trade via the creation of DIs or depository interests, but also providing a platform that those who own shares can see and all those who want to own shares are able to see as well. Now, there are going to be like 5 things that are going to do for us to improve the share discovery and improve liquidity. So the first that I've talked about is the market structure, and then improving the liquidity, particularly on the Lusaka Securities Exchange. There are plans that we've put in place to be able to do that. But the biggest problem, or the biggest issue that we have, is creating a ZCMH story. The CEO and the board chair and the ambassador have all highlighted the ZCMH Zambia story. Now, this is a story that maybe is known in Zambia, but how do we get that story known across the world? And that is why we are working on a very, very robust program to ensure that the assets that we have are properly packaged and then are properly marketed to potential investors, but also partners, so that we can have growth and have shareholder value. We're also going to restructure the capital structure of the business. So, for example, we do have about 40 million shares that are not issued. Now, this is an opportunity for the company to raise funding on the various stock exchanges. So, for example, if we are going to upgrade our listing to a higher platform, we could use those shares, but also we could use those shares to attract new capital to support the growth agenda that the CEO has talked about. The fifth thing is the issue of aligning the various price mechanisms that are on the 3 stock exchanges to ensure that the settlement structure remains even, and also we reduce the spread across the stock exchanges. In terms of the phases, you'll be happy to note that we've already appointed advisors, one on the Lusaka Securities Exchange, and then we have another advisor appointed in London who is going to deal with the Paris Euronext, but also efforts to restructure the London Securities Exchange. Now, the first phase is going to highlight a few things that might look like, window dressing, but very, very important, and that is the cleaning up of the register, both in Paris, but also largely on the London, by conducting a tracing exercise for all shareholders. And apart from that, we might also need to undertake an odd lot offer to just ensure that we have an updated register. Further on, based on the analysis that is going to be undertaken, we will create depository interests to be able to attract investors across the world, and particularly on the London Stock Exchange. We think that because we're on the primary listing, there's an opportunity for the company to raise real capital for its future growth, but also on other stock exchanges. There is also a consideration for a share buyback, just to control the amount of shares that are available and control the pricing, so that we do not create unnecessary spreads. I talked about the promotion of the company going forward. It is important for shareholders to have sustained growth. So apart from just having the capital gains, shareholders should also be able to maybe buy and sell depending on their need, rather than just hold shares and put them in the shelf. The second phase is going to be the actual stabilization of the Lusaka Securities Exchange platform, where once we create the depository interest on the London Stock Exchange, the hope is that we will be able to link these 3 stock exchanges so that shareholders can trade freely across the different stock exchanges. And thereafter, the ultimate goal will be a potential equilibrium across the 3 stock exchanges. Now, what is the process? Well, you'll be happy to know that in October 2025, the company already revised its articles of association to be able to give it the platform on which to operate, or the authority to undertake various corporate actions. So, for example, the company can now conduct share buybacks. It can create its own treasury shares. and basically work around modern ways of managing its capital structure. So that we already have in the bag. But it also requires a lot of interaction with the shareholders. So what is going to happen is that we will provide a lot more details. For example, if we're going to conduct any share buyback, we'll provide details around the valuation. We'll provide details around the offer structure itself. And that is going to be subjected to the scrutiny of the shareholders so that the shareholders give it a go-ahead. But beyond that, remember that we are listed on the 3 stock exchanges. We'll also need to have the approvals from the relevant regulatory bodies across the various stock exchanges. So that process is going to be very transparent, and that process is going to be communicated to the shareholders appropriately. Furthermore, the actual treatment of the share buyback, for example, is going to be backed by the creation of the treasury shares, with the board having the authority through the shareholders. That is going to be part of the overall structure. Finally, you might be asking, when is this going to happen? As I mentioned, remember that we have different phases to this process. We need to manage the risk of collapsing the share price as we create, even trading platforms. Therefore, the process itself is going to be managed expertly and with a lot of involvement of regulators, but also ensuring that we sustain the value as we undertake these options. So that being said, there are some phases that might take a very short period of time, but other phases might require a lot more consultation with the regulatory bodies, but also undertaking a risk assessment around the various options that we are working with our advisors to ensure that we do not cause another problem trying to solve one problem. So some of the activities that are going to happen within a short period of time would include the issue of managing the register, the creation of a depository interest, and also the fungibility exercise. The odd lot offer and targeted share buybacks will also be undertaken, but obviously remember that we need to look at can the company afford this exercise, depending on the potential value of the share buyback. So the directors need to give the confidence to the shareholders that by undertaking this exercise, they are not creating first a false market, but also they are not putting the shareholder value or funds into danger by undertaking actions that might be counterproductive to the listing optimization exercise. And the biggest activity that you see we're going to launch shortly is the improvement of the company outlook. We're going to conduct a lot of roadshows, but also regular investor engagements like we've done here and across the different targeted markets. We would also promote shareholder interaction by having some shareholders visit these actual investments. Because remember, for shareholders to have the confidence, instead of investing in what maybe they think exists, we want shareholders to appreciate the value of these investments by putting, by maybe even going underground to go and see, this is an investment that has a future, rather than imagining what they've invested in. So there's going to be a lot of interaction to ensure that we promote that investor confidence, but also sustain growth for the company. We've just have, I think today marks 7 days since the board approved the new strategic plan. So around the actual implementation steps, we're going to again outline detailed directions that the company is going to take in promoting the future growth and sustainability of the investment. I'd like to say thank you so much for your time.
Thank you very much, Dr. Mjumpi, Company Secretary, Zesi CMIH. Just laying ground regarding the listing optimization, and I'm hoping that we will. You've gotten a thing or two, and we're happy to get any questions for clarification. The next session that we'll go into, obviously, with the presentation that was made earlier by the Chief Executive Officer about the company, is the question and answer session. And please feel free, ask all the hard questions. The executive and the non-executive team is here to get your questions. Those of you who are online, please feel free to post your questions in the chat, and we'll be able to pick up the questions. I know that some of you have already posting the questions, and also we'll get the questions in the auditorium. But I also must mention that we did receive some of the questions from the shareholders that are present here, but also those that are joining us online. A lot of questions were sent, over 150 questions were sent. And as you know, we might not be able to address all the questions during this session. We may take the whole day. So we did pick out some of the critical questions that were being asked by the shareholders online and during the registration. So what we will do is that we will be able to take about 9 questions from the list, because what we did was a lot of you were asking maybe questions on a particular asset or a particular issue. So you find that maybe there are 10 or 15 questions, say on KCM, on Konkola Copper Mines or Mopani. So we'll group that and then give a response. So as we are thinking of, I'll give maybe 2 or 3 questions from here, and then the executive and the non-executive will be able to respond to that, and we'll also get some questions. So please feel free as you are putting your thoughts together in terms of the questions you would like to ask. Obviously, some of the questions that you may have asked have been addressed during the presentations that have been made by the Chief Executive Officer and also the Company Secretary. So without further ado, I will just pick on the key 3 questions that were asked from those of you who registered online. And the first one is on the Trafigura case. Some of the questions related to what could be the potential for impact on the company, financial or otherwise, with regards to the ongoing Trafigura dispute, assuming the worst case scenario, and the projected effect on the proceedings, the arbitration proceedings. So a lot of questions related to Trafigura case, and I will invite maybe the Chief Executive Officer just to give a response on that.
Is this on? It's good? Okay, thank you, Messi. The outcome of the Trafigura case has been, we have put out a press statement on SENS. And while the outcome is adverse to us, the company is actively evaluating its options regarding that final award. And we remain committed to safeguarding shareholder value and as much as possible to ensure that the impact is going to be minimal to the business. Any further updates arising from what we are doing, those will be announced to the shareholders and the public as we go along. Thank you.
Thank you very much, CEO. The next question is relating to the company cash health, on what the status of the 2025 annual report, where it is, and just the company cash health in view of the late publication of the 2025 company financial statements. CEO?
Thank you very much. We are working towards finalizing the audited financial statements for 2025. Right now, we are in the final stages, and any interactions with the regulators, we have some timelines with that. We agreed with them, and we are ensuring that this is being done in a transparent way, and also being as compliant as possible. The financials, as you know, as a group, is a sum of different parts. So we have subsidiaries, we have investee companies, we have to consolidate all that information. And that's why on a yearly basis we have some delays, but this is something that we're working hard on to make sure that we conclude the audit as quickly as possible. And including making sure that we have the right disclosures and as much transparency as possible in line with expectations.
Okay. No, thank you very much, CEO. I think the next question, before I ask for questions in the auditorium, is on the, again, project financing for ZCCMH. ZCCM has financed several projects with debt. That's question number 8. What level of debt do you think the company can afford? CEO?
Well, thanks very much. I think, to be fair, a lot of the investments that we have done recently, in fact, all of the investments that we have done recently have been out of our own balance sheet, and we have had, a very healthy cash balances from which we have been able to pay dividends, as mentioned, since 2015. But we are at a stage where we see significant growth. As pointed out recently, we concluded an investment in Evergreen Energy. That's going to be $54 million. Already we paid that half of that, and there's an amount that's due within the next 2 months or so. We have recently concluded a transaction on Limestone Resources. Again, arising from that, maybe there'll be phases, particularly next year, where we need some significant cash contributions. And also, of course, Mingomba, the launching of the shaft sinking, which happened recently, that as the construction rolls out, will require significant cash over the next 5 to 8 years. So we are seeing a situation where we may have to go out there into the market and raise cash through loans. And to that effect, we are in the process of recruiting advisors who are going to assist us to see how we can optimize our balance sheet so that we can fund future projects. And that process will be very well disciplined to make sure that the capital allocation yields the returns that we need within the right time frames. And that's the way we are going to be dealing with this. Thank you.
Thank you very much. I know that there's a question from those online relating to the 2025 results. I'm sure that has been addressed as well. There is a question from those joining us online regarding how, I'm sure this one has been addressed. How do you plan to quickly address the very significant discrepancy in stock prices between Luce and Paris? But I think that has been addressed. I will take some questions before we return to the list, and also some of the questions that are coming through. If there are any questions in the auditorium, any burning questions? Okay, we've got a hand. Please just tell us your, Andrew, please just tell us your full names, and you may ask the question.
Hello. My name is Victor de Oliveira. I'm a shareholder, and thank you so much for the presentation so far. My question is: do we have any time frame for the issuance of the results for 2025, and also if there will be a dividend for this year? Secondly, it's about the listing in Paris to attract investors and some companies who cannot invest in access. Are you expecting to change the listing on the Euronext to another type of market, and also to have maybe continuous listing and not just with the 2 fixings per day, which can be an issue for major investors. These are my questions.
Thank you very much. 3 questions there. Time frame for the 2025 financial issuance. Any dividend, CEO?
Thank you very much. The time frame for the audited financial statements, as I mentioned, we are at the tail end. There are a few things that we need to conclude with the auditors. I can't give you a precise date, but it should be within the next month or 2. We should be reaching the end of that process and, arranging for an AGM. As to the dividend, as I said, these are times of restructuring, you'll find that the results are going up and down. But I have to say, why should we break this track record that we started in 2015? Maybe that gives you an idea that we've been paying dividends since 2015. We don't want to break that track record. So, but I can tell you, the level of dividends that we might pay.
Okay.
As for the Paris listing, I think as part of the optimization process that the company secretary talked to, we have retained advisors who are going to assist us in terms of where should we be. So yes, the current listing is probably too low, but we'll take advice in terms of what it entails for us to move up, the costs and the benefits of doing that, and then also how that links into what we'll be doing in London, and also the fungibility, so that the shares can be traded across the 3 exchanges. So, but that process is kicking in. It has taken a bit of time. It's a process that we started early last year, or even maybe the other year, in terms of talking through this. But we have done the basics. The articles have been changed, and we are now getting to actual implementation. So you will see the results of this. And in terms of timelines, Company Secretary, where are we there?
Yeah, just to again assure shareholders that I think beginning next week, Monday, we are working on a very detailed plan with the advisor based in London, just to make sure that we accelerate the assessments, but also some of the key steps that I talked about that might require just a few actions before we can implement. But for some of the activities that might take a lot more assessment, we will start, but we'll keep you informed around the actual timings and whether or not certain options might be available and where, as CEO has mentioned. Yeah.
Company Secretary, maybe the aspect of the potential change in the BOLs from the access, if there will be any potential upgrade?
Yes, so just like CEO has mentioned. So if you look at the Paris access, I think the problem is that if maybe it's midnight in Australia and you want to wake up and buy shares, perhaps it's closed. Obviously, the desire is for a continuous trading platform. And if, for example, after the assessment, we find that it's more appropriate to revisit where we are listed, those are again options that we will be looking at. But even over and above the current listings, it's possible that maybe there are other opportunities elsewhere where the company can attract a lot more capital. Again, we remain open to making those assessments to determine where else perhaps we could have some listings. So all those are possibilities that we'll be looking at.
Now you are in Paris, London. So would that be an extra place to trade, as you mentioned, or would it be like, oh, we just transfer the shares from London to that new place, or from Paris to that?
Yeah, so that is going to be involved by this detailed assessment. I'm not able to tell you now whether that will require an extra listing or just a transfer of one listing to another. That's an assessment that we're undertaking to see the advantages and disadvantages and then come up with an appropriate framework.
Would you have an answer to that? Sorry. Would you have... Would you have an idea of this assessment by the next AGM, or would it be too soon?
I think by the next AGM we should have moved a lot more steps. We should be able to provide a bit of a framework, but we see that for some of the actions, like I highlighted, they might require a lot more consultation with the regulators and things like that, but we'll be able to provide an update by the next AGM.
All right, thank you very much.
Let me just add a little bit to that. I think probably it's too soon for by the next AGM. We want to do the basics first. You know, the current listings, and make sure that we are at the right place before we do anything. But what's clear is that when you look at you know, the emerging mining companies, where most of the activities, a lot of it would be in places like the Toronto Stock Exchange, Australian ASX also. So these are things which we have to we'll look at and say, are we placed at the right level? But I think that's it's a bit away in terms of the immediacy. Right now, we just want to sort out where we are and make sure that we are getting the best you know, value to our shareholders before we make any changes, if we are going to make any significant changes at all.
Thank you very much, CEO. Any questions? Okay, we have a question here. Please just tell us your name and the question.
My name is Mercy Luyanga. I'm a shareholder. I'm based here in Paris. So I have two questions. The first one is for the copper. Is it being exported as a raw material, or is the pellets the final product? And in whatever form that it is being exported, how does that affect the price per metric ton? And to that as well, where is the biggest market for the exported copper? So that's one question. The last one is about electricity use. More specifically for Zambia, we know that there was problems of load shedding at some point. So how did that affect the production for the company? I know that you've probably mentioned about solar and other sources of energy, but how would a load shedding situation, the way it affected Zambia the past couple of years, affect the overall production for ZCCM? Did the company reduce its production to make sure that the energy was fairly distributed across the country, or is that a totally different, independent source of energy that had no effect on the company's workflow? Thank you.
Thank you very much. Between Chair and CEO, please you can address the copper being exported as raw and how does it affect the pricing and the market thereof.
Okay, I'll have a go, maybe check and follow later. In terms of the way the copper is being exported, there are probably three forms. So the first one would be concentrate. So typically this would be copper materials which contain copper of, say, over 30% maybe to 40%, but which implies that the other 60 or 70% is waste. So it's not ideal because you're transporting this waste for it to be thrown out somewhere else. So typically what you want to do is to process the copper as much locally so that you are talking about exporting something over 90%. So the second form is in the form of bars. These are sort of like anodes rather. These would be 95 to 99% copper. Again, there is an opportunity to do something with that copper, which normally is the third stage, which is refining. So that refining would then produce copper, which is like 99.99%. And some of that copper cathode could actually be listed on the LME, London Metal Exchange. So these are the sort of three broadly, broad categories. Of course, maybe a bit lower would be if somebody is trying to export just raw copper, so ore. But the value of that would be fairly low because you'll be likely to be getting anything over, say, 10% copper ore. So that's the format. Now, in terms of where is the real value? Well, of course, the further downstream that you go, the more money you can make. So, for example, converting the copper cathodes into cables. In Zambia, we now have about 5 companies which are making cables, or even growing maybe. And again, that adds value, but it puts you in a different category. You are now, it's a bit like being a farmer between, just growing maize and then going to milling. Then you have to look at the marketing aspects now, And then also what we know is that a lot of the consuming countries have built up barriers against products like, finished products like cables. So while copper cathodes and anodes may not attract tariffs, definitely cables will attract duties and tariffs wherever you are landing that. So that becomes another issue then. And can you land these cables or other products, finished products, competitively? So those are the challenges, from the Zambian perspective. So, but what we are trying to do is to process as much as possible downstream. And what we can see now that in terms of smelting capacity, we are probably at nearing the limit of about 1 to 1.2 million tons of copper. At which beyond that we have to look at additional smelting capacity. Particularly if when we get to the 3 million tons, we will need additional smelting capacity in Zambia.
So maybe, Sir, you can just quickly and briefly respond to the impact of electricity and how it affected the production. Briefly.
On the power deficits, what the government responded to this in a great way. One way was to have what's called open access. So for those who were in a position to actually buy power from elsewhere, it was allowed for companies to buy power from the Southern African Power Pool. And of course, that meant that the tariff was higher, but companies continued getting power. So while the load shedding was going on for everybody else, most of the mining companies were able to get power, but at much higher cost. So that was one of the impacts. But of course, then the private business also responded to this by coming up with additional solar power, and then also even the trading. I think we've seen a couple of more power trading companies coming online, so that the market is more liquid. But with the integration of the regional market, Southern African Power Pool, it means that large customers in Zambia can buy power from South Africa, from Mozambique, or wherever. And similarly, even with our own power companies, if we end up in a situation where we have excess power, we should be able to export that power elsewhere.
Okay.
Just briefly, also in terms of the market, if you look at where the copper is being consumed, maybe in the 70s up to early 80s, a lot of Zambian copper was coming into Europe. Now, after that, the Eastern markets opened up. Japan, for a long time, was consuming Zambian copper. And in the early 2000s, we saw China open up. And also even in the Middle East, Zambian copper is being delivered to places like Egypt, Malaysia, Indonesia, some of these places, Thailand, Zambian copper is going to all these places. The main deciding factor is the freight cost, which is the cheapest source. How can you deliver copper cheaply? If between, let's say, Dar es Salaam or Walvis Bay or Durban, which is the cheapest place you can deliver the copper to? Those are the main drivers. Because if you are delivering to the other side of America, it could be too expensive.
I'd like to catch you on that one because we have a lot of questions on the company and I would like us to focus on that. Thank you so much. But the conversation can carry on after the meeting if you want to know more on how the copper export and what is happening to that. I'll come to the chair. One of the questions that is that we received from the shareholders is on Mopani. In February, there was an African intelligence website, that article that came on IRH had approached the ZCCMH to renegotiate investments in the Mopani. Could you assure us that, as stipulated in the Delta Mine's acquisition agreement for the mine, that $400 million that the new investor was to date has invested that, and the target of 220,000 tons of copper by 2028 still seem achievable?
Yes, thank you very much. I wish to assure our investors and shareholders that we are keeping a very, very close tie on Mopani. As you know, that's our flagship. ZCCM owns 49% now. And we have had meetings in the past, including for me as a guest person, I went to attend Mopani's board meeting. So Mopani is ramping up. As we are talking, they're investing. There's 12 rigs. This is about exploration. They are changing certain things, and they have even found some good grades of copper. Not only are they looking at the traditional, remember there are 3 new shafts that have been sunk in Mopani. There's one, the Anderson shaft in Mufulira. There's a new synchronarium shaft, and all the concentrators have been put in, including the underground, the gear. This is what transports the ore. We were, I think, last month visiting Mopani, so we are on course. The only thing is that you have to do the drilling and increase. They have to increase to mine ore up to 6 million. So by next year, this time, we should start seeing the ramping up at Mopani. So we are on course there, and we're keeping a serious tag on it.
Thank you, Chair. The questions from the chat room. Maybe I'll throw this to the company secretary. Given that ZCCMH currently has a 0% shares buyback ratio and no buybacks have been conducted recently, could management elaborate on the company's current stance on share buybacks? Specifically, under what conditions would the board consider a share buyback program a more effective use of capital compared to alternatives such as dividends, debt reduction, or a reinvestment into mining and energy asset? Secondly, what key financial metrics or valuation thresholds would trigger such a decision? And then thirdly, if a buyback were to be considered, what would be the optimal scale and time frame, and how would it align with the company's broader capital allocation strategy and listing optimization program?
I think this question has been touched a little bit, but maybe just to emphasize that this is a very technical exercise which requires expert reviews of the actual impact based on the options that are going to be taken. And since we've just begun, shareholders are going to be updated on where we are on a regular basis. But we will ensure that it is done within the framework of the agreed regulatory requirements, but also the ultimate goal, the assurance to the shareholders, the ultimate goal is to preserve shareholder value. So in terms of the actual details, we may not be able to provide the details today or now, but we will take into account all these comments as we undertake the listing optimization exercise.
Maybe just, I think, to top up what the company secretary has said. The main problem that we discovered was, the articles of ZCM were so old. These options couldn't come. So the first thing we had to do was to do the housekeeping, do an update on the articles, which allows us to do this process. If you remember the last AGM, we did approve. We have new articles now. So the foundation has been laid. So these are purely levels and layers we're going to build on. So we are on course on that, and you'll timely be updated.
Thank you very much. Coming to the CEO, any update on the previously discussed plan to convert shareholdings in copper investee companies to royalties? Keep up the great work, Tim.
Thank you very much. This is a process that's taking a bit of time, but you can understand that given that the actual change in ownership happened 25 years ago, coming in now and telling majority shareholders that we would like to change the model of us extracting value takes a bit of time. But it is something that we have started working on, and we are engaging our core shareholders to make sure that they understand where we're coming from and why this cash generation is really important for us. So it is ongoing. We can't give specific timelines, but we have advanced discussions with our partners on the process of switching from dividends to royalties, which are cash generative. Thank you.
Thank you very much, CEO. I think one more for you. Another question from Felipe Legoff. Your three turnaround assets, Mopani, Lubambe, and Konkola, have collectively absorbed billions in restructuring costs and external partner capital. Meanwhile, Mingomba with Cobalt Metals won't be online until 2031. In this 5-year window, before your growth pipeline matures, what is your realistic free cash flow generation capacity? And is it sufficient to sustain your dividend policy without relying on one-off items like royalty income or asset re-evaluation?
Thank you very much. Asset revaluation actually doesn't give you cash anyway. So that can be something that you depend on. But still, we have to say that, the royalties coming out of Kansanshi, those are life of mine royalties. So those won't stop anytime soon. And in fact, Kansanshi itself, it's expanding its production under the S3 expansion project. So we expect more, particularly if the better prices continue, where they are or even better. The other aspect also, of course, from our presentation is that we have now a situation at Mamba where our objectives coincide with the other shareholder, and we have quarterly dividends being paid. So this is something that we are embedding in new investment, such that going forward, any new investment agreements that we're entering into, there would be a dividend policy where profits after tax, when declared, we would have dividends to be paid, as opposed to what has been happening, where management can actually massage or manage the payment of dividends depending on their own capital recapitalization requirements. So we believe that we can sustain to a large extent our dividend payouts. And if our capital reinvestment will require much more additional capital than what we are generating, we will consider debt raising. I did mention that. So that's another aspect, because at the moment, our balance sheet is fairly clean without an external debt. So there is an element, there's a possibility of gearing there to assist us with our capital investments in your project. Thank you.
Thank you very much. Maybe I'll still have you with one more from Thierry Klump. If the IPO listing of KCM confirms a multi-billion-dollar valuation for Konkola Copper Mines, how does ZCCMIH intend to ensure that minority shareholders of ZCCMIH fully benefit from this value creation rather than the majority of the benefit accruing solely to Vedanta?
Okay, so the IPO which is being talked about is the Coppertech Metals on the New York Stock Exchange. We have commitments with Vedanta Group that out of the remaining, remember there's a 1.1 billion capital commitment in the recent shareholders agreement. Out of that, they've funded $600 million, and there's still a $670 million balance. We have commitments that out of the IPO, that 670 is going to come back to invest in KDMP. But also, if you look carefully through the documentation on the IPO, you'll notice that Vedanta has indicated that there is $2.7 billion worth of additional investments that will be required at KCM to reach its full potential of 300,000 tons. And some of that could be going into the tailings leach plant 2, enhancements to the smelter and the concentrator, and other things like including a thermal power plant. So we expect, although it's not formally agreed to, we expect that any additional funding that's raised beyond the 670 will be targeted towards these expansion projects that Vedanta has acknowledged as being necessary, to put KCM at the right level. Now, the benefits of that is that if KCM actually reaches its full potential, we all win, okay? So including the majority shareholders and ourselves, including the minority shareholders also in the business, we all win. The other aspect also of the benefit of this IPO is that currently we have written down the full investment of KCM in our books. But with this IPO, we are going to have a transparent market-driven valuation of that 79% that Vedanta has in KCM. That could now be the basis for our own valuation of our 20.6%. So there are positives and positives coming out of this. Thank you.
Maybe one significant portion. The commitment by Vedanta was that they would spend 1.1 billion on the KDMP in the next 5 years. But with the listing now on the IPO, we have adjusted the time. We are saying, look, this cash is available now. The investment, we have brought it to 2028. I think that is very, very significant as a takeaway. We have had to insist that if the IPO is going to bring money next month, by the way, they are raising money using our asset. That money is coming directly to the asset. We have ring-fenced that, and we are going to have the KDM development way before the 5 years' time. I think that's very significant for our shareholders to take note. We took advantage to bring that negotiation, and it's locked in.
Thank you, very Chair. Well, let's just still on coal. Just one more question. The company secretary mentioned earlier on that a 10-year strategy for the company, where you, as a board, you approved it just last week. That's the 5-year strategic direction. So what some of the questions that were coming relate to the future of ZCCM and the outlook. So there's curiosity about the strategic direction for the next 5 to 10 years.
Well, for us, I think as ZCCM, we want to be the best we can. Now, I know people are saying most of these traditional mines, the cycle is 5 years development. There's a reason in our presentation we have spoken about diversification. We are not only just waiting to develop the copper asset. Now, we said the 3 million target by government by 2031 has brought, by the way, the mining is an enabler. Our president keeps saying, use mining as an enabler. The requirement for power, for electricity, like my sister mentioned, we had to swing very, very quickly because the government brought in reforms to say we need energy for the mining sector. Can you imagine we are shareholding in our mining sector? So ZCCM went quickly. In CEC, the Copper Belt Energy, is the company which has all the grid distribution of power into the mining. ZCCM owns 33.1%. So it means that for every kilowatt that is going in the mining sector, we are earning money. And we get dividends from Cobalt Energy. Second, if you take Mamba, whatever dividends we are getting now, that was 300 megawatts of power. We moved quickly in the past 2 years. We had to go into phase 2. So whatever money we have been getting from Mamba today, we are getting per quarter, I think, almost about $15 million. We have increased the Mamba thermal power by another 300 megawatts, meaning we grow by 100%. But not only are we doing that, we also brought to Mamba 100 megawatt solar power. As you know, solar, you have 9 months construction. So between July, maybe August, we are commissioning and adding 400 megawatts of power to Mamba. It means that our income from Mamba will grow, okay? If whatever we are getting now, we are doubling, we are increasing by 133% of the power generation. It means that Mamba in the future will even give us more dividends than what we are getting in the copper mining as royalties. So this is to safeguard. We are looking at the lowest hanging fruit. We have just gone into Evergrande. They're developing also a 600 megawatt and in phase 2. We have invested 30%. So we are saying that for every ton of copper, you need 3 tons of lime. We have just announced the restructuring of our lime company in Ndola. So we are taking advantage of the growth in the mining sector to add value. And in future, we are trying to discuss in the 10-year plan we have, in terms of value adding. As you know, yes, you mentioned about value addition. It's like a farmer. When you grow chicken, you want to grow chicken so much, but you can't also open a Kentucky chicken. If you think, because I'm a farmer, I've got chicken, let me sell fried chicken. So copper is more or less like that. The copper is being driven by the EV revolution, by the data centers. So the mature industries that are consuming copper are in Europe, are in China. But going forward, we need the technology and we also need the electricity. But that is an opportunity in itself. And we can bring this technology, but it has to be structured, because if you are doing an EV plant, for example, in China or Paris, you are lucky you have other supply chains, those who are supplying tires, who are supplying components. So Africa, unfortunately, for so long, Europeans, Americans went to China to invest. And you have turned these Chinese to where they are. We are saying Africa is ready now. So we are here to attract you, to say copper is there. Come and join us. As ZCCM, if you can add value to the copper, we can buy as much thousands of copper for you. But those are secondary industries. So our 10 years outlook looks very bright for us. We are moving not only just to wait for dividends in the copper, but the energy sector we feel is transformative and the environment is correct.
Okay. Just a comment from CEO quickly on the...
Okay.
Yes.
Just high-level things. In that 10-year plan, we target to move your business from a valuation of 1.4 billion right now to 7 billion. Okay? That's a commitment that we're making. And what's going to drive this? One, exploration. We want to participate in the full exploration of Zambia, as shown by the National Aerial Survey that's taking place, which is 55% complete. Secondly, participating in direct mining. Currently, all the mining that we're doing, most of it is through our investments in investee companies, third parties. So going forward, where possible, we will participate directly. We will be mining directly. Third thing is energy, which we talked about. So there's going to be more energy, more and more energy. You know, as mentioned, Zambia is aiming for like 10 gig of power by 2031. The fourth item is trading. We want to be trading our equity metal, and that will be copper, but also things like gold, manganese. And ultimately, going forward, we will also consider whether we should be trading energy being produced from our energy companies. What's critical to do all this is that we also will consider partnerships with solid parties who can bring in the technology and experience and also funding so that we can work together. Thank you.
Thank you very much, CEO. You've heard it for yourself, from about $2 billion to $7 billion company in the next 10 years. We'll take one more question in the auditorium. I have Mr. Thierry Charles here, and then just one last one here. So we'll start with Mr. Charles here.
My name is Thierry Charles. I'm a shareholder. I'm also president of ZCCM Defense. My question is about the additional 5% in stake in Mingomba. We see in the press that our voluntarist chair is eager to get it, but it seems to be hard to get it. What is the problem? Financial issue because of our other investments, or is Cobalt reluctant?
Okay, we'll just get another one. Matepa, please.
Je suis Louis Alexandre from Assini Capital, UAE-based trade and investment firm in gold. My question is around the diversification plan that you mentioned, especially on the gold, artisanal gold. Is it open for business? Are you having a clear process for traders and buyers to come and to start your diversification program? Is there some need for processing investment as well? Can you tell us more about the gold aspect?
Okay, so we'll get one last one from this side. So,
Chilofia Mtale, my question is on your recent two partnerships with the Evergrande one and the Limestone. How is ZCCM going to manage the risk of being exposed to one partner on two significant things? That's wonderful group. What measures have been put in place?
all right, thank you very much. I will invite the CEO to respond to why it has taken long on the Mingomba acquisition of 5%, and also the diversification plan with regard to the gold, and then lastly on the Evergrande, managing the risk exposure to one partner. Okay.
So, thank you very much, Charles. In terms of the Mingomba, as you know that Mingomba is a very big discovery, and for us as ZCCM, we are looking to the future. Historically, we have had this limited shareholding because of the old mines, and surely our intention is very, very clear. For Mingomba today, we are a shareholder, and as Mingomba is developing, doing exploration, we are meeting all the cash costs. ZCCM, other than the 5% free carry, we have been contributing to whatever they're discovering. Secondly, we have stepped up as Mingomba when during the time before we commissioned the sinking of shaft. Mingomba, where the challenge, they were looking at more land where they can do some tailings dam and the like. ZCCM stepped up. So our intention is that, yes, as you know, from the time they started, the valuation of the mine has been going up, meaning that what we would have acquired and paid before is less. But for us as ZCCM, money should not be an issue because we're in the same market. If Mingomba's shareholders can raise money in Europe, in America, we can also raise money, we can come to the platform. So this is, we feel, it's a continuous negotiation, and our ultimate aim is to make sure we increase our shareholding. So money for ZCCM, we don't believe is a problem because everyone is raising money in the international market, and all we are doing is that we step up the campaign. We use all of your shareholders. You are our ambassadors, by the way. So money can be mobilized both locally and also outside Zambia. So we are keen, my brother, to get that extra percentage. Our intention is very clear. Then, in terms of the gold, Yes, government has mandated us to do the gold sector, and we, just like manganese, we are formalizing. The first project we are undertaking is called the Mofumbwe or Kikonge. This gold, by the way, has been discovered by ordinary Zambians. I think gold gives a challenge to people to discover. On this site we are developing, we had more than 30,000, we call them illegal but informal people. So what we have done, we have taken a technical partner, but we are 51%. We are going to extract, as we are speaking, we are also going to be able to refine our own gold. Before the end of the year, we are setting up a gold refinery because we feel this is the lowest hanging fruit. But as you know, gold, you have to set up traceable systems. So we are working with artisanal mining. Government has given cooperatives, so we are assembling them. But as we speak, the SCCM and its partners, we put in money to develop the whole infrastructure. We'll cluster them, we'll give them equipment. Then when we mine in their small areas that has been allocated, we are the buyers of that gold. Then we'll make sure we'll make it in the good grade where Bank of Zambia can buy, but also the international market. So gold, we are so passionate about it. We feel that we don't have any competition in that space. And we also do have, in 3 other areas, we have the Kasenseli mine, we have the Lufunsa where we're exploring. So we are looking for potential partners who can even come and do physical mining. So gold is a space we should watch on, and we are determined to transform the SCCM, especially in developing the gold, because we can trade with the gold going forward. I think on the Evergrande, I'll ask CEO to handle that.
CEO, just briefly on the Evergrande.
Okay, thank you very much. On the, I think the question really was about the exposure to the Wonderful Group. Just something about the Wonderful Group. Our perception is that they have been very innovative in terms of doing certain things which for a long time seemed to be impossible. So, for example, with our United Capital Fertilizers, they have made Zambia to be self-sufficient in fertilizers, and they are in the process of expanding to Compound D. And we have already have a relationship with them on the phosphate. So that phosphate, the phosphates will be producing a fertilizer called MAP, monoammonium phosphate fertilizers, which will also be feeding into the UCF production lines. This group have proven themselves in terms of their capability for project management, timely project management, which is important, and controlling those costs. They're also able to fundraise for these significant projects. So these are skills which we believe by working with them, they are bringing into these projects. So Evergrande, as we speak, is substantially under construction. I think something like to the order of 30% or thereabouts, which is on track to start production early next year. Now, when that happens, again, we should be in a position soon after to start receiving dividends. You know, so these are sort of early cash generative projects that we are interested in. The other aspect also on the Ndola Lime. Ndola Lime is a company or a business that has cost us a lot of money over the years, including $100 million investment, which just was never productive. Okay, so and currently, as we speak, we this business is under effectively care and maintenance, and every month we are paying ongoing costs for salaries, for maintenance, and other things like that. So we wanted to have a partner who could actually turn this around very quickly, very effectively, and for the sort of proposal that they put to us, it was convincing enough, and we believe that they are the right partner. So we, when you talk about exposure, we believe that our risks are well controlled, and we would like to do more with them on Ndola Lime. For those who saw the press release, just a little bit of detail. The first phase is the lime plant being put in place. After that, there's going to be an additional lime plant or a cement plant. And in the third phase, there will either be a cement plant or a lime plant, depending on what happens in stage 2. but you can actually see that that's additional value being created, because the initial lime plant is 600 tons per day, that which is quite significant. But our partners can see the market, So this is the sort of stuff which, if we get it right, again, it will be cash generative very early on. Within a few years, we should be getting cash coming out of this business. So I think the risks are well managed here and well considered, and we think that we have a partner with a very solid track record. Their business in the fertilizer sector is gaining traction in the region. They are exporting to neighboring countries, and we would like to see something similar for Ndola Lime going forward. Thank you.
Thank you very much, CEO. I think we'll get one more question. This is the last question from the chat room, and it's from Thierry Clamp. Following the Trafigura arbitration, does the CCMH have any enforceable claim against Vedanta or KCM to recover amounts paid under the guarantee, given that the underlying financing benefited KCM? So that will be the last question for the day. Yes.
I would rather stand here. So I think on the issue of the Trafi, just to give you a background what your company did, we have been following up this matters, The background is that in 2021, I think soon, or just before the elections, Trafi entered into some agreements to deposit $100 million in a KCM to say, I'm giving you this money. You'll be giving me the copper or something. So along the way, that was not delivered. You can imagine, you go to someone who's running a bakery to say, give me the flour, I'll make bread every day for you. Then the bread is not delivered, but you go, where's my flour? The flour is what? Taken away. But for ZCCM, the process of the current award, you have noticed, last year, somewhere in December, there was a partial award in the arbitration in London. So the partial award mentioned that, yes, it's more likely that Trafigura is going to win the case, but give us any mitigation. What reason do you have most likely that they don't have to be paid? So when we went to Indaba last year, we believe, for me, being transparent. And by the way, in Zambia, our president has been encouraging companies that don't use the court to settle commercial dispute, engage. So we went to Trafigura that despite the court case going on, can we talk? Because we realize Trafigura, by the way, is the buyer in Lubambe. We are shareholders in Lubambe. Trafigura has got an agreement to buy 200,000 tons of Lubambe material for years to come. Then we said, hey, we have to talk. It's like me and my wife, we are in the same bedroom, but I take my wife to court. I said, we can't be in court. We are talking as friends. Either we discuss, are we ending the relationship? So in good faith, I think we discussed and we explained to them that we did an undertaking. By the way, the guarantees was KCM gave a guarantee. Government of Zambia that time also gave a guarantee. So, Trafigura took 3 parties to court. So in good faith, they understood our story. Then we said, can we negotiate in the worst case scenario? Because we don't believe that as ZCCM, we have this money in the back and to safeguard shareholder value. So in February 2026, Trafigura did agree with us. And we said, yes, potentially you have sued for 100 million, but we don't foresee in the near future to have this money for you. But what can we do together? So they came back to us. We negotiated that even if the award is expected to be 100, we'll not have it. But when they gave us indicatively a price we negotiated, we also offered. We offered way below 50 million. Then having got an indication in February, then it was our turn. We realized, yes, this matter happened at KCM. So we went to knock to KCM. KCM, this thing was given. Of course, Vendetta, they had, they were not the operator of the mine at that time. But we said at the end of the day, the asset is KCM. Let's negotiate. If Trafigura beats me too much, and you realize Trafigura also, when we went to KCM, we realized Trafigura and KCM have continued doing business. Then we said, hey, You are dealing in our asset. We're a shareholder in Lubambe in KCM. So I think we are brothers and sisters. Let's have a good coffee. So we drank nice coffee with Trafigura, and we drank nice coffee with the KCM. So if you see our announcement, we said we are using a legal strategy. We can't so much maybe announce, but you'll be happy to know that we have taken safeguards and we are doing everything possible to see that whatever we do with Trafigura is actually obtained from this end. So in terms of your potential for the dividend, you may have nothing to worry about. But of course, I'm saying in these four corners of this room, and I know we are public, so we have taken measures to make sure that the impact is less on you and the balance sheet. So I thought I could share that through you. Thank you.
Thank you very much, Chair. And that marks the end of the Q&A session. And if you have any questions, please feel free to engage with the executive and the non-executive during the lunch time. And the rest of the questions are also very important that we receive during your registration. So what will happen is that we will be able to post the list of the questions together with the answers on the website, and we will share, for those of you who did registration, we'll share the Excel sheet that has got all your questions and all your answers. But you can still feel free to send in your questions, any further clarifications, and we'll be able to provide that. So I'd like to say thank you again for your fruitful engagement. At this point, I will invite, as we come to the end of the program, I'll invite the representative of the ZCCMH Defense, French shareholder minority, and to give a vote of thanks, Mr. Cherry Charles. Please, thank you.
Our train was cancelled. Sorry. On behalf of the minority shareholders, our group of ZCCM Defense, I would like to thank you, Chair, and the ZCCM teams for organizing this meeting. It's always a pleasure to discuss the company's project with the management. It's a pleasure for us. We have just seen that the company has never been better. The price of the copper explain this in part, but it is above all thanks to your commitment and your efficiency. Thank you. Under your leadership, the relation between the minority shareholders and the company have improved significantly. You know, because it was before you, but we used to speak out in the press when things were not going well. Today, we are silent. We are silent, and today I am telling you that we are satisfied with the work that's being done. I'm being a shareholder since for nearly 50 years, 55 years. No, 25 years. Sorry, 25 years. As many of my fellow colleagues. And we see in 1 year, you have achieved things that had not been achieved in 15 years. Thank you, Chair. We see the implementation of the buyback. We are pleased that you are tackling head-on the issue of the undervaluation of share on Euronext, but also on Luzet, compared to the net asset value. This is another point. There are another point that is important for us, minority shareholders. The cheaters must be held to account. I am thinking in particular of Mopani's past management. We know as minority shareholders that restitution has things. It's important for us. Finally, I would like to inform you, considering the improve of the company, that I will be contacting the CEO of IDC, the majority shareholder, to make a proposal to reward you. The listed ZCCM IH is no longer a mere state-owned enterprise. Successful work deserves an appropriate reward. For us, we consider you do a good job. We know that your current remuneration does not reflect your level of efficiency, commitment. And finally, whatever the outcome of the future presidential election, we sincerely hope we can keep you as a board chairman for a long time. Thank you, Chair. Thank you, the team.
Thank you very much for those felicitations to the board and management of ZCCM-IH. And to conclude and wrap up today's session, I'll invite the board chairperson just to come and give the closing remarks.
Well, first, I think before I give my closing remarks, I wish it's quite humbling, Charles, I think, to listen to you and just to give you assurance that, yes, in whatever we have done, whatever we've achieved short period of time, we could not have done it. Definitely, yes, I could have the energy, not as a single person. It has taken the input of you, minority shareholder, majority shareholders, and management and directors. Thank you very much. So it's quite humbling, but it shows what, yes, you can have leadership, but what teamwork, working together can achieve. I think for me, coming with an open mind, I have no prejudice. When people say maybe the minority shareholders are saying this, I just took stakeholders as stakeholders, and you and me, I think we have engaged each other. And I didn't even realize so much 1 year has gone and we've been quiet. But let me also just, for the benefit of the shareholders, assure you that ZCCM, government has taken reforms. First of all, the mining sector was in a coma, but government, through the leadership of President Hakainde Hichilema, went to stabilize the mining sector. The whole tax regime, mining is a long term. After that, he also introduced reforms in the energy sector. What you see ZCCM is simply going for the low-hanging fruits, and we have been working together. And you can see even today, we have government here representing the head of state with us. It shows that the kind of support we have across the board. So it means that when we work together, putting our energies in one direction, we can achieve so much. And I want to assure you that we'll continue on that trajectory. And thank you very much, my brother. And we are here because we want to make this company the best it can be, and also we work towards that goal. And sometimes achievements about legacy, right? We don't look at the dollar income, but the small legacy. But thank you very much, and we'll leave for you to deal with the ideas. So, ladies and gentlemen, in getting back to my final remarks, it falls to me to bring our capital markets and investor day to a close. First, my thanks for your time, whether you joined us online or in person here in Paris. Thank you to Her Excellency Zambia's Ambassador to France, Mrs. Judith Mlenga, the minority shareholders present, Charles Thierry here, and also our board member, Mr. Tosak, present. And above all, we wish to share our commitment to future engagements. And on that note, as a long-term plan, we want, as SCCM, to have our ambassadors in Europe. We want, as the company secretary said, in the future, we are going to have a calendar twice in a year where we invite the shareholders. We receive them as ZCCM. It's a tourism, but we want to take you to our gold mines, to our manganese mine. When we talk about Mopan, we take you there. These are your assets, and we want you to be part of the story. It's a good time. Maybe when it's too hot in Paris and it's cold like now in Zambia, we invite you to take you through so that you can see your assets at work. So we set out this morning with a single ambition to show you ZCCMIH as it truly is, in substance, not in slogans. You have heard directly from the Chief Executive Officer, Mr. Muyangwa, and from the Company Secretary, Dr. Mujumpi. You have seen the detail behind our copper interests, our growing energy and minerals base, and the disciplined work that has restored the strength of our balance sheet. You have the evidence. The judgment rightly is yours. Let me leave you with a thread that runs through all of it. Zambia holds some of the most significant copper resources, the second largest copper producer in Africa, much of it still to be developed, and copper is the metal on which the world's energy future is being built. ZCCMIH sits at the center of that story, with exposure across the country's leading producers and a portfolio that reaches beyond copper into power and value addition. As economies everywhere search for partners, they can rely on the critical minerals of the future. Zambia offers something increasingly rare: significant resources, a stable and open investment climate, and a long record of working in good faith with partners from every part of the world. Our listing on Euronext Access places that opportunity directly within your reach. But ladies and gentlemen, I am chairman of this company, so let me speak plainly about what sits beneath every number you have seen today: governance and trust. A resource is only as good as the stewardship behind it. Thanks to your remarks. The role of our board is to ensure that ZCCMIH is run with discipline, with transparency, and with a clear line of accountability, that the commitments we make in a room like this are the ones we honor long after the room has been emptied. We have undertaken difficult reforms because they were necessary, not because they were comfortable, and we have done so with a long-term firmly in view. This is the standard we hold ourselves to, and the standard by which we ask you to hold us. Because the strongest relationships are built on two things, trust and time. That is true between nations and no less true between investors and the companies they back. We are not seeking a transaction this morning. We are seeking partners who will grow with us over decades, whose success and our own are bound together, and whose returns are matched by real value in the lives of ordinary Zambians and also shareholders across the globe. So let me close as I should. On behalf of the board of ZCCM, thank you for being with us today. Your interest is welcome, your scrutiny is valued, and our door, like our country, is open. This is the beginning of a conversation, not the end of one. I now invite you to join us for lunch, where the board and management and our ambassador will be glad to continue the conversation directly. Thank you very much once again.
The invitation has been granted by the chairperson for you to join us to take a bite outside with some finger snack and some drinks outside. And again, once again, thank you so much for everyone that made it for this Invest and Capital Markets Days at CCMIH, all of you that have traveled afar, and all of you that joined us on the webcast. Thank you so much. We are excited about the next chapter as CCMIH. We wish you a pleasant day ahead. Thank you.